You continue to like that, and the other themes as well that we just spoke about. Wishing you a good day ahead and a good weekend as well. Well, Berger Paints, that's the one that we're going to be focusing on next. Remember, the numbers were pretty good, actually. We did see, gross margins. They were a little bit low, but otherwise, the numbers on the whole, they gained some market share as well. And the hope is from here on, the EBITDA number will improve. To understand more about what went on, we have Abhijit Roy, the MD and CEO of the company, who joins us. Hi, Mr. Roy. Morning. Thanks so much for joining in. Well, give us a couple of details then. You said margins will improve in the second half of the year. What kind of improvement are you penciling in? And also volume growth for the past quarter, what was it? And what are you looking at for the year?
So, yes, we are looking forward to an improvement in the margin. That's largely on the back of the raw material price decreases which have been happening in the last 2-3 months, and it remains at those levels as of now. So we expect at least a 2 to 2.2% type of an improvement in gross margin to sales ratio. So that's the type of improvement that we are more or less looking at. As far as the volume growth is concerned, we registered a volume growth of around 11% in Q2 with a value growth of around 22.5 or 23%. So that's as far as the volume and value growth is concerned. Urban demand was better than the rural areas, and we expect that the rural will also pick up now in the second half of the year.
Okay, so this 11-12% volume growth that you spoke about in Q2, do you think it's something that you can sustain in the second half of the year? And I'm also asking because you have some fresh capacity coming on stream. There's about a 35% addition there. What happens post that, and what kind of volume growth do you see?
So, as far as capacity expansion is concerned, we were at about 80-85% of our utility in normal months, and in the seasonal months, it used to go up beyond 100. So we had to set up a capacity there. Whether to do it in a smaller way or in a bigger way, we decided that we'll put up a larger plant. There is greater economies of scale there, and that's the reason why we have picked it up in that way. So 35% addition is a big one, and it will last us for another 2.5 years at least. So that's the reason for that expansion. The second part of it is the volume growth. The first half, obviously had a weaker base, and we were growing at a faster pace. The second part of it, will not have that weaker base, but we will still grow at a reasonable level of volume growth. May not be the way we are positioned currently, because the first quarter we were doing much better because of a very low base. The second quarter we had 11% growth. Third quarter we will be having a reasonable volume growth, and even in the fourth quarter as well. So the second half we will have somewhat normalized volume growth, I would say, in that range of 10% approximately overall. The volume value difference will, however, decrease, because last year all the price increases that happened in towards November we had finished off most of it. So therefore the volume value gap will go down substantially. This quarter it was 12%. Next quarter it will be much lesser than that.
Right. Abhijit, hi. Good morning. So just a couple of clarifications. That 2.5 or so odd percent gross margin improvement this is the guidance for H2 by the end of the year?
That's even in Q3 you will see an improvement, but okay. H2 definitely we will look forward to that type of an increase.
And will that flow down into EBITDA at the EBITDA level as well, this improvement?
That should flow through to the EBITDA level as well.
Okay. You said 11% volume growth. What's the split between decorative and industry?
Primarily decorative. We are about 80%, 82% decorative, and the rest is industrial. So the volume growth is mostly in the decorative side.
And what is the gap? Is there any gap now between where your prices are and where prices need to be given input prices? Or you think that gap has been completely bridged?
The gap has been completely bridged. We are on the slightly positive side now, so that's why we didn't take up the price increase in the second quarter, though we were feeling the stress a little bit, and the prices were going down. So, if we had taken it up, then possibly we would have had to drop it now. And that is not a good thing for the market, taking up and pulling it down again and again. So we decided that, we will weather through this second quarter, and in the third quarter, since the raw material prices have softened a bit, that will help us in the gross margin expansion.
Okay, all right. Mr. Roy, your market share has improved a little bit as well. I think close to
Yes,
around
sir.
80 basis points odd. Do you see?
Right.
Do you have a targeted number? Do you get, say, to around 20% market share mark? You have a bit of a smirk on your face. I think you have a target. I don't know whether you're going to tell us that.
No, no. So we keep on. We have our internal targets, of course, but there's no. It is an endeavor to actually keep growing at a faster pace than the competition. That's what we should be doing, and there is enormous gap that exists, and there is an advantage for us in terms of distribution network expansion, which we are working on very seriously. This year we have jacked up that number quite a lot, and we expect therefore that the advantage will accrue in the second half and also going forward next year.
Okay. What about your investments in terms of marketing, branding? Considering that there's so much competition now, will it go up as a percentage of sales?
As of now, there is nothing. Sorry, we are the same bunch of people, competing in the same space, So I think we will have to await that, But yes, we continue to spend on our marketing budget as much as is required. If there are new launches which we are very excited about, then we will up our spend. Otherwise, normal spend levels goes on.
All right, we will leave it at that. All the best, and thanks a lot for joining in, Mr. Roy. Have a good weekend. That's the word coming in from Berger Paints, but don't lose sight of the market. The Nifty now at 18,314 is very close to its 52-week high of 18,351. I mean, it's just a matter of time before we get there. And big moves coming in Apollo Hospitals. So we'll do that. On the other side, we'll be joined by the managements of Apollo Hospitals and Samvardhan Motherson. Both companies did very well this quarter, and both managements lined up in a bit. Stay tuned.